will do some questions in the homework 3. In this homework, right, we cover questions for chapter 7 and chapter 11. Only a few questions, right? And the first questions about some concept, right? For euro dollars, right? Euro dollars means a dollar deposit in a foreign banks, right? Outside of the US, right? US is the country issue the dollars, but these deposits are made in banks outside of the US, right? So this is called euro dollars. So be careful, the euro here, right? Does not mean the European countries, can be any country outside what US, right? However, for euro credits, right? This is forward for the euro currency, right? And also the credits means what? Short to the midterm loans, right? You see the mortgage is for the long term, more than a year, right? But for the credits is forward for the short term, right? To the medium term, right? So it's most likely less than a year, right? So the short term and medium term loans, right, of what? Euro currency, right? And it will extended by the euro banks, right, to the corporations, right? And the sovereign governments, non-prime banks, or international organizations, right? So it's a euro, right, denoted loans, right, made to the corporations or the governments or other institutions, right? So these euro dollars and euro credits are be different, right? So the euro dollars, right, the euro means the foreign countries, not in the US, but euro credits, right here the euro is the actual euros, right, we mean, right? So next questions about some calculations, right? You see there is a company called ABC International, right? They try to borrow what? They try to borrow 4 million loans, right, from the bank from the Barclays banks, right, in London, right? These loans with amount $4 million, right, with a label as a reference rate plus a lending margin, right? Lending margin is 0.65%. Both rates are based what? Annuals, right? And for the 3 months loans can be roll over, right? And you can see these ABC international companies, right, borrow these loans for the first 3 months, then they try to roll over to the next 3 months, right? So basically, they borrow this loan for total what? For total 6 months, right? For total 6 months. So what's the total interest charge? For the first 3 months, right, our LIBOR rate is 5.5%, right? So that's for the first 3 months. And also, the bank will charge a margin above the LIBOR, right? Because the bank, they need to get some profit, right, by allowing these loans, right? So we not offer a directly LIBOR rate, they must to charge actual called what? Margin, right? So margin is the rate above the LIBOR rate, right? So the first 3 months, the interest should be what? Should be 5.5 plus 0.65% over 12 times 3, right? For next 3 months, you see the LIBOR will be different, right? LIBOR falls to 5%, right? But the charge of the margin will be always same, right? Because for the same loans, right? For the same loans, right? To the same what? To the same borrowers, right? The bank will, offer the same margins, right? Based on the borrower's, credit, right? And also the size of the loans, right? The margin will be always the same. If the same loans roll over for the next period, right? It will charge the same margin, right? For the next 3 months, right? You can see the level will be different, will be 5%, right? But our margin will be what? 0.65%, So the total interest for the next 3 months will be 4 million times our total interest, right, for the 3 months. So will be divided by 12 and times 3. So you adding these two, period interest together will be the total interest charge for these loans, right? We have the two parts, right? And this part is for the first 3 months loans interest, right? And this for the next 3 months loans interest. Next questions is for the FIA, right? You are more familiar with FIA, right? We already, deliver a specific videos, right, for these topics, right, in very, very detailed, right, explanations. So I hope you already mastered to how to solve the FIA pricing and settlement, right, valuations, right? So in these questions, right, you are what? You are the borrowers, right? You are the borrowers. You are entered a 3/6, right? You hold a long positions, right? You enter a 3/6 forward, right? 3/6 forward is in this way, right? 0, 3, 6, right? So the first 3 months is forward. The first 3 months is for the FIA, right? Next 3 months is forward for loans, right? This is for FIA, is for loans, right? So FIA will be expired in the 3 months, right? Then the loan will start, right, from the 3rd month to the 6th month, right? So the loan will be for 3 months, right? And this loan's notional amount, right, is $10 million. And when you sign a contract, right, you are offered with what? 3.5% interest, right? So that's what you can get, right, based on this contract. What's the real interest rate on the market? Sorry, what you get from the contract is what? 3%, right? 3%, right? What you actually observe on the market on the time 3 is what? 3.5%, right? That's the market rate, and this is your contract rate, right? So as a borrowers, right, you are getting better off or you get worse. You can see here, right? If you borrow from the market on time 3, you will pay what? 3.5% interest. But based on the contract, you only pay what? 3%. So you are what? You are better off. Right? You are better off, right? So what's your saving? Your saving of the interest will be 3.5, right, minus 3%. At least for the 12 months savings, right? But you only borrow for what? 3 months, so you will divide by 12 and times what? 3, right? And that's your interest savings, right, for 3 months. And based on what's the principle? Based on the 10 million principles, right? So your total interest saved will be the $10 million loans, right? And times the 3 months interest rate, right? And this interest rate difference, right, between, what's the rate in the contract, what's the rate on the market, right? And this amount is delivered on the 6 months, right? After loan finished, right, you will know how much interest you can be saved, right? However, right, we know it is a notional amount, right? You are not actually willing to make a loan. You will prefer to get a cash settlement, right, before a loan actually happen. So that's on time 3, right? So you need to determine what's the amount of this value on time 3. Use the discounting, right? We try to time value of the money on time 3. Use our discounting process, right? So after you finish that, solve the interest saved on the time 6. You will do a discounting process, right, to say what's the value of this interest saving on the time 3, right? So what's our discounting factors? You see our interest rate on the market is what? 3.5%, right? So this one is our discount rate, right? So 1 plus 3.5% divided by 12 times 3. So this is our discounting factor. This is our interest saved on time 3, right? Divided by our discounting factor will be the amount, right, for what's the interest settlement, right, on the time 3. And this amount will be paid from the bank to you, right? Because the bank will lose the money, right? They will pay more than what? They will pay more than a contract rate, right? But you are better off. So the transfer of interest will be delivered from the bank to you with this amount on the times rate. Now let's go to chapter 13, right? For the global equity market, right? So I know most of you, right, like to do some investment, right? Especially you have some cash in your hands, right? You want this cash can growing with the time, right? You want to do some investment, right? And there are many stocks available on the global market. You can do the what investment, right? You know we have the New York Stock Exchange and Nasdaq, right? In the U.S. and in the foreign countries, we have also the other exchange, right? For example, in Japan, we have the Nikkei index, right? In the UK, we have the FTSE index, right? So different countries offer different exchange, right? You can buy the stock from different country on this stock exchange, right? And as you know, right, for this week, something capture our attention on the headlines is what? It's the crude oil, right? The crude oil price going down quickly, right, for the past 2 weeks, right? And you see it's caused by the Russia and the Saudi Arabia, and they have some, disagreement, right? And they try to, you know, affecting the price, right? But for this week, the price suddenly dropped even further, right? With the price almost what? Almost to the zero, right? On a Monday, you can see the price of the WTI crude oils, right? Almost touches zero, right? And like the 2 p.m., right? The price is what? $4.7, right? And at the end of the day, and the price almost what? Almost touches zero, right? With the bottom touches zero, right? So you see, that's the province of the crude oil, right? And also you found something even more strange is what? Is the oil futures price. Oil futures price is also go to the crash, right? You can see the dollars per barrels for the oil future, right? Even less than zero, right? The oil price is very low, right? But still positive, right? But oil futures on the May 2020, the price even less than zero. It's minus $37.33, right? This is a real number. It's not something, with mistake, with error, right? This is a real number without any errors, right? So you may wonder, right, why the oil future price can be what? Can be negative, right? Can be negative, right? Usually for the commodities, right, the price should be positive, right? For example, the crude oil price can going down, right, to almost zero, but cannot break these zero lines. And any commodities must have the price above the zero, right? So while the future can be negative, right? Actually, this is relevant to what we studied in these two chapters, chapter 7 and chapter 11, about what? About futures, right? What is a future? Right? Futures are what? It's a standardized forward contract. We just studied the forward, right, in the chapter 7 and chapter 11. Especially we studied what? We studied the FIA contract, right, in the last questions, right? We know we can solve the how much we will settle in FIA contract for the cash settlement, right? We know how much interest we will pay. Same thing for the oil future, right? The oil future will also settled on what? On the expiration date of the contract, right? So here is for the May 2020, right? May 2020, right? So for the oil future, how it was settled, right? for the investors, for the speculations, right, they will do the cash settlement, right? But for the most long position holder of the future, right, in the real market, they will do what? They will do the physical settlement, right? Because most companies, when they buy the future of the oil, they want to do what? They want to do the hedging, right? They hedging the risk of the oil price, right? So they worry price will going up quickly, so they buy the future, right? So they can buy the oil with the given price on a what? On a contract, right? But it's very weird. The price here is even what? Even negative, right? So it means the people even willing to pay the money to the short position holder, right? So what that means? So that means the people, right, holding the long positions, they willing to pay the money, right, to the short holder to not receive what? This oil, right? That's why the price is negative. So why the price can be negative, right? Let me give you some explanations, right? So that you can relate this part, right, to our class on the previous two chapters, right? You know, for settlement of the physical settlement, right? If you have a long position, means you're willing to buy these commodities, right? For example, here you want to buy what? You want to buy the oil, right? If you want to buy the oil, or you want to, receive the oil, right? How can you do that? You must have a what? Warehouse, right? For the what? For the delivery of the commodities, right? For the oil, right? You must have a what? Tanker, right? A big tanker, right? To receive such, high volumes of the barrels of the oil, right? Into your what? Into your warehouse, right? If you not have the tanker, if you don't have the warehouse, how can you receive the oil, right? And also, if you want to receive the oil from the seller, right, you must have what? You must have the, shipping, right? And transportations of the oil, right? All this will be actual cost, right? Can be incurred, right? So why this number can be negative? Because the storage cost and the shipping cost are even more than what? The price of the crude oil itself, right? More than the crude oil price itself. So that's why the price is negative. And so means the long position even willing to pay the money, asking what? Asking the seller to shipping or moving the oil away, right? They don't want to receive the oil, right? They willing to pay the money, right? To let these people to shipping the oil away, right? So our cost of the storage and the shipping, right, more than the price of the crude oil itself, can cause the price of the future to be what? To be negative, right? So this number is a rational number, right? So on the history, right, the price be negative is very real, but it's still what? It's still rational, right? Still rational, right? You can see now the oil price is really, really cheap, right? With a high storage cost, right? So no one willing to really to receive, right, this oil, right? Even they already signed a contract. So you can see the price of the what contract is even negative, right? So why the storage is very, very shortage right now? Because what? Because the COVID-19, right, pandemic, right? Because the pandemic, right, many countries stop what? Productions and manufacturing, right? So they don't consume oil anymore, right? Especially US, right? US is a big company, right? Consume oil. Not all the US, manufacturing industry are what? Are halt, right? Are halted, right? Many states right? Not even do a protest, try to reopen the factory, right? So we don't consume oil anymore, right? But for the producer of the oil, that's the Saudi Arabia, right? Saudi Arabia and Russia, right? They still producing what? They still producing the oil, right? As regularly because they cannot halt the production overnight, right? The machine still in the productions, right? People still working there, right? So they still pumping, right? The oil, right? As regular, right? But no one consume oil anymore, right? So with more and more oil, right, in a surplus, right, we must have a storage, right, to receive the delivery of the oil. However, the storage is what is very what shortage right now, right? You can see the curve, right, show the shortage of the storage intensified, right? That's why the futures, right, the cost more than the price itself, right, cause the price to be negative, right? And also the oil is not like milk, right? If you produce too much milk, right, you can easily dumping, right, to the river, right? So like many states now doing, right, so they dump the milk, right? They dump the milk, right, to the river, right? Because the milk is organic, stuff can be decomposed, right? Will not cause the pollutions, right? But oil, if you dump directly to nature, can cause what? Pollutions, right? So Russia and Saudi Arabia cannot dump the oil to the ocean, right? If they do that, they would get a huge penalty for that, right? So not like milk, right? The factory can reduce the production, can dump to the river to still maintain the, less quantities on the market, right? But for oil, right, they cannot change the quantities of the supply, right? In the short term, right? So that's why it's caused shortage of the storage, right, in the recent days. And this cause what? This caused the price of the what? This caused the price of the oil's ETF, right, going down quickly, right? With the supply of oil more and more, right? You see the crude oil price, right? Not like the future, right? Going down dramatically, but still going downward quickly, right? So this is the oil ETF price, right? This is the crude oil, right? ETF, right? You can see this one in the following slides with more detail, right? And this orange curve is the crude oil ETF. You can see the price going down quickly in the recent days, right? Dropped more than 60%, right? Over last 2 days, right? From Monday to Tuesday, right? The UCO, right? The crude oil ETF lose more than 60%. In contrast, I also display the black curve, right? What's the black curve? It's the TRMD. Is a company, right? Producing what? Producing a tanker and also providing a shipping service, right, of the oil. And these companies, right, because the shortage of the storage, right, these companies stock surge. Right? You can see the oil price dramatically going down, but our tanker producers, right, the stock price surge on the what? Opposite, right, on the opposite way. Right? You can see the connection here, right? If you know these connections, no wonder you can make a profit, right? Either long the tanker company stock, right, today, or you short the UCO, right? You short the oil ETF, right, today, right? Both way can make a huge profit today. So let's say the detail for the UCO, right? UCO is called a Pro-share Ultra Bloomberg crude oil, right? ETF. Most individuals, right? You guys cannot buy the future, right? Future is usually by what? By the company to do the hedging, right? Like ExxonMobil and some companies, right? Most individuals, you want to buy what? Stock, right? Which stock can represent the price movement of crude oils? It's not easily to find a specific stock, right? But you can buy what? You can buy the ETF, right? ETF is the same thing, just like the stock. You can buy and sell directly on the stock market, right? So you can buy what? You can buy the UCO, right? UCO is a leveraged, right? Oil ETF, right? From the purchase, right? So with the oil price moving up and moving down, right? UCO will be even moving higher and moving lower, right? With the leverage. So that's why you can see the stock price of the UCO, right, going down quickly, right, for this year. Right, from what? From the $20, right, on the February, right? Now it's only what? $1.35, right? At the end of Monday, right? At the end of the Monday, right? This Monday, right, when the market closed, right? The price of the what? Of the UCO, right, is almost what? $1.35 per share, right? Very, very cheap. Right? If you look at the historical pattern of UCO, right, it's actually much higher, right, on what? On the 2008, then the price continue moving down, right, gradually, right? But still above 100, right, on 2015, right? Now it's only what? $1.35 per share. A huge change, right, for the past 4 years. But what's the surprise, right, for this stock? The next day, right, on this morning, right, on Tuesday morning, right, you see the price of the UCO, right, is not 1.35, but it is what? $23.3 per share, right? So that's why, I received a call from my friend this morning. He told me he got a huge gain, right? He bought this ETF, right, on a Monday for $1.36 per share, right? But overnight, right, $23.3 per share, right? He's very happy, but I'm very surprised because I saw the crude oil is still going down, right? So why the price overnight can going up to $23.3, right? I checked the detail. I found what? It's not the oil price recover, but because what? Because the company itself, right, announced or doing something called what? Called a reverse split, right? What is the reverse split? They just, merge 25 shares to one share on a Monday evening, right? Without inform market, right, in advance. They doing this one overnight, right? Combine 25 shares to one share, right? So if my friends just bought 25 shares, right, for this stock, then it should be $34, right, on a Monday evening, right? But over the night, what's the price for these 25 shares? Only $23.3. So instead, he not make a huge gain. He actually would make a huge loss overnight, right? So 23.3 minus 34 over, 34. That's the loss for him, right? So you can see here, right? It's 24 minus 34, right? So almost what? Almost, for example, $10, right? Over 34, right? So more than what? More than 30% loss overnight, right? A huge loss, right? Overnight, right? And you can see the price for today are even getting lower, right? So means he even get what? Even more loss, right? For today. So why the UCO companies can do the reverse split. And why they do that? Because in the US we have our regulations, right? If your stock price going down too low, right? For example, close to zero, right? They can delist your stock or ETF, right, from the market, right? To avoiding their stock to be delisted, right? The UCO companies, right? The ETF companies do something called reverse split. So this one just a simple accounting adjustment, right? They try to save a failing product, right? Using a reverse split, right? So they just try to put the 25 shares into one share, right? Make a number not equal to zero, well above zeros, right? So they will not be delisted, right? But this way, they will not, generate any return for the investors, right? Only just the number change, right? For these different shares, right? Nothing will be the gain from the reverse split, right? And you can expecting, right, if the oil price continue going down, right, UCO price will continue going down quickly, right? But it will not go to a zero, right? At least in the short term, right? So if the market recover, right, you will expecting the UCO price will also recover, so they can avoid to be delisted, right? So they will not, go to bankruptcy, right? They can still maintain on the market for a while with until recovery, right? So they will avoiding, delisting or bankruptcy in such case. That's why they do the reverse split, right, overnight, right? So that's why my friend saw the price today, this morning, get a big surprise, right? But it's not actually he make a gain, but he make a great loss, right, overnight. So that's the reverse split. You can see the split and the reverse split a lot in the real market. So pay attention to these, these events, right? Okay, so for the ETF, right? ETF called what? Exchange traded fund, right? Exchange traded fund, right? So they use they use something as underlying, benchmark, right? And the ETF will follow the change of this underlying index, right, to change accordingly. Right? For example, oil ETF, right, and also index ETF, right? For example, S&P 500 ETF, right, gold ETF, and the other commodity ETF, right? For regular investors, right, you don't have too much money to do investment, right? But you still want to exposure to the price of the oil, right, gold, right, these commodities, right? You will better to buy ETF, right? Not buy not buy the future, right? For example, for the oil ETF, right, the most popular one is the UCO and USO in the US market, right? UCO we just mentioned in the previous slide. USO is also an ETF, but this one is not it's not leveraged, right? So when the market going down, right, for the oil price, right, USO will follow the same percentage. It not will be exaggerate, right? But UCO will be leveraged, right? So with the one percentage change of the oil price, UCO will be even change more, right? So when the market are recovering, right, you can better to use the UCO, right, to make a profit, right, with even quicker, pace than the USO, right? But if you are not sure the market will recover very soon, right, and you still want to buy in the oil, right, ETF, then USO will be more conservative, right, more safe way, right, to do investment, right? And talk about the investment, right? And for these chapters, right, we see many, stock from different country, right? For the past month, we actually have some recommendation to a student, right? which company is good for investment. On February, right, one student sent me email, right, told me, his father before the quarantine, right, his father want to buy some vaccine company stock, right, for the coronavirus, like COVID-19, right. So I gave him two recommendations in an email. One is the Moderna, right? Moderna is vaccine company in the US, right? And it's the first company doing the trial, right? Human trial, right? So you can see the stock price in the past months, right? From after quarantine, right? And now, right? The price is almost what? Doubled, right? Doubled. So if he follow my recommendations, right? Actually bought this stock, right, in the portfolios, right, he can enjoy a good profit, right, for these past months, right. The next recommendations, right, for me, right, for the investment, right, in the past months, right, actually I showed this one in class before, right, it's the Inovio, right. Inovio's producing a vaccine in a different way, right. The Moderna, right, producing a vaccine based on the RNA of the virus, right? And for the Inovios, right, they use what? They use algorithms, right? And use machine learning, right, to match what? Match the DNA sequence of what virus, right? These virus sequences are released by the China on the late of the January, right? So after the Inovios, right, saw the sequence of the DNA, right, of the virus, right, they begin to develop this vaccine, right. Now it's also on a human trial, right. So Inovio stock, right, not increasing too much, but still a good investment, right, from the $7, right, to 9.5. If you start to do this investment even earlier, right, for example on February, right, it's almost from the what? $4 or $5, right, to $9.5, right. This stock used to be $18, right, but some short companies, right, some companies do a short, right, like the Bridgewater, right. So these are famous company to the shorting, right, to short sell this company, right. They release some rumors, right, criticize these companies cannot deliver a real vaccine in the future, right. So that's why the stock price used to be what? Tumbled, right, but now it's already recovered, right, to $9.9 today, right. But both stock can be a good investment, right, in the past 1 month, right. And also another vaccine company is Novavax, right. Novavax is a company not in the US but in the European, right. And I try to follow this stock, right, for a while, and I used to buy this stock, right, on $10, right, but I sell this one when the price reached to the 14, right, but now the stock price is almost $22, right, per share, right. And all these vaccine companies stock, right, why they surge in the past months because the people's panic of what? Of the pandemic, right? People's panic about pandemic, right? They try to resort to the what? Vaccine as the final solutions, right? To stop this disease, right? Stop this virus, right? So that's why these, companies stock, right, going up quickly, right, in the past months, right? But for the peoples, right, they want to get a cure before, vaccine are available to the public, right? Vaccine will be approved the 3 stage of the trial, right? And at least, right, 6 to 12 months will be available to the public, right? So we can expecting the first vaccine available will be next year, right? This is very, very hard, right, for FDA to approve any vaccine, right? Even they are on a, expedition, process, right, of the vaccine, it will be still not available until next year, right? However, that's one medicine, right, showing the effective, cure, right, to the COVID-19 infected patient as well as the remdesivir, right? And this is an injection, right? And this one showing many good results, right, to the patients, right, with severe or critical conditions of the coronavirus, right? So the many patients in ICU, right, after receive the injection of the remdesivir, right, they are recovered afterward, after 1 week, right? And actually, I mentioned this one in class on February, right? On February in class, right? I mentioned the Gilead. Gilead is the company producing what? Producing the remdesivir, right? And you can see the stock price, right, from the February, right, to this month, right, increased by what? Increased by $15 per share, right? Not too bad, right? Not too bad, right? If you look at the whole market, right, whole market going down quickly, right, in the past months, right? But our Gilead, right, the stock, right, still moving up, right, more than 10%, right? So it's not a bad investment, right? If you follow my recommendations, right, on February you bought some Gilead stock, right, you can get some profit for that. Okay? So all these vaccine, right, and medical companies like Gilead, right, are people concerned about, the spreading of the coronavirus, right? That's why, this stock of these companies are moving up, right, in the past months, right? If our economies, right, showing a recovery, right, our, spreading of the COVID-19 can be stopped, right, and our curve become more flattened, right, and even reduced, right, and then, this company stock is not very good choice, right? So only for the, time, if people get even more panic of the, this virus, right, then this company stock will be surged quickly, right, in the short term, right? But for this special time period, right, all our class for these matters are held remotely online, right? And are using what? Are using the Zoom, right? And the Zoom are used by many professors, right? And also in the company, right? They also use the Zoom a lot, right? Some professors adopt to use what? Blackboard, Archer, right? Some professors use the Google Class, right? But Google Class cannot, use the live teaching, right? They can only use the homework assignment most times, right? For example, my kid, right, is in a public school, right, right? So his teacher, right, elementary school, right, they only use the Google Class, right, for what? For the homework assignment, right? They don't teach it every day, right? They only assign the homework, right, for the kids, right? And then for twice or once a 2 week, right, they will hold a Zoom meeting online, right? So the students, right, these young kids, right, can talk through Zoom, right, with the teacher and with the other students, right? So the Zoom are popular even in a K school, right? In a PS schools, right? They also use the Zoom. And also, for my kids, right, during this past 2 weeks, right, he are using the Zoom, right, to chatting with his, friends, right, so they can play, the Minecraft together, right, use the Zoom, right, so they will share the screen, right? So one is the host, right? One is the participant, right? So they will play the game together, right? Use the Zoom, right? So that's why I also recommend Zoom, right? About 2 or 3 weeks ago, right? So I mentioned this one in class because I use the Zoom, right? And I know also the others, right, use the Zoom by during this special period. So I expecting the Zoom will be a good choice for investment, right? So Zoom stock is not too bad, right? So it's growing, right, with the past months, but not too much, right? Why the Zoom stock not increasing too much? Because there are some concern about their security, right? Security of what? Privacy, right? Some governments, right, are worried about private data, right, will be can be stealed, right, by the other companies, right, if they're using Zoom, right? And that's why the stock price used to be going down for a short term, but now it's recovered, right? It's now recovered to $150 per share. Right? But here's a video, right, just released from Bloomberg, right, about some interview with the CEO of the Zoom, right, Mr. Yu. Mr. Yu is the founder and CEO of the Zoom, right? So he talked about the concern of the securities of the Zoom, right? And also answer some questions from the interviewer, right? And the interviewers is from New York City, right? So you are very familiar, right, with what's going on with the Zoom recent days.
Eric, thank you so much for joining us. Obviously, I know you got a lot going on, so it's really great to have you. Zoom has been a lifeline for people in the middle of this pandemic, keeping business connected. But unfortunately, the security issues have undermined a lot of the good news, whether it's Zoom bombing or Zoom raiders, as they call, hijacking meetings. I sort of want to start with, what do you have to say to the folks who, maybe they had a meeting that was broken into, or they're a student who was harassed via Zoom? What do you want to say to some of these folks?
I think Zoom was built for serving the enterprise business customer before this crisis. And we learned, right, for the first time consumers, and they do not have IT team. We should do more. Not only do we offer the service, but also give them a very strict security and controls, like make the password or waiting room default. We already took actions over the past several weeks.
I just want to get a sense of what it's like on the inside of a company when you suddenly go from 10 million to 200 million users in a matter of weeks. Talk to us about what that's like. It's not just business customers, but
So in this video, right,
Eric, thank you so much for joining us. Obviously, I know you got a lot going on, so it's really great to have you. Zoom has been a lifeline for people in the middle of this pandemic, keeping businesses and families connected. But unfortunately, the security issues have undermined a lot of the good news.
So I will not display the whole video, right, in these lectures.
We
right?
have all those.
So you can watch the video by yourself, right, by click the video on the slides. Right?
Well,
so
that's great news.
You can see the interviewers, right, asking some questions about the public concern of Zoom, right, especially the PS school, right, in New York City, and also some government like Taiwan,
with
right,
AES.
they
And however,
now
because the
control the
internal
access
process
to
was still a
Zoom
startup growing company, and some marketing materials are taking the document.
right? But
you look at
the
WebEx
CEO
today,
said
by
to do
default,
some
same AES,
improvement, right,
128 or AES
security,
256.
concern,
Microsoft also
right?
same
And
thing. For the
they
conferencing,
already
video
working on these
conferencing,
problems.
if you support a true internet integration, I don't think they're not like a FaceTime.
And he said, right, the Zoom will be still good tools, right, for use, right, with more and more improvement.
Suddenly, you have to improve almost
You
over
can
the
watch
night.
this video, right, by yourself, and you can also comment on these, interviews, right, and we will hold a discussion next time. And also, if you believe the Zoom is a good, platform, right, that's not a very good substitute, right, substitute with the Zoom in the short term, right, and maybe the Zoom is a good investment, right, for short term. And also in the long term, right? If the Zoom, like the Mr. Yuan said, right, they can, hiring more people and doing more improvement, right? And the Zoom become even stronger, right? So maybe the Zoom can be also a long-term investment choice, right? So please let me know what you think. But you can also mention that, right, in your Wall Street Journal, right, summaries, right? You can choose any articles you want, right? For example, right, in the Wall Street Journal, I also saw many articles about Zooms, right? And especially, the surge of the demand of Zoom during this pandemic, right? And over 1 week, right, the user of Zoom increased by millions, right? So what's the implications, right? What's the concern, right? What's the change? What's the trend of working from home, right? So for example, right, in the future, I think, right, more people will prefer to maybe working at home with more flexibilities, right, with the time, and also you don't need to rent the office, right, to save the cost and save the time for transportations, right. So for commute, right, sometimes it's not easy, right, for the distance, right. So Zoom can be a good choice, right, for the long distance, right, conference and work, right. So you can think about it, right. You can put your comments and your thoughts, right, on the articles, right. And also another recommendations that I made in class is the Tesla, right. Tesla, right, has been a good, popular stock, right, in the past year, right. And for this year, right, the Tesla stock very, very what? Very, very tumbled, right, after, pandemic, right, the price even going down to $400, right, per share, right. So, after we quarantined at home, right, almost a week after a week, right, the stock price from the $900 per share, right, to $400 per share. The lowest, I think, is $380 per share, right. So many people are worried, right, about Tesla, right, because they halt the factories in California, right? So they worried about their business, about their orders, right? So the people still waiting, right, to buy this stock, right, until the price touch very bottoms, right? So no one, right, not too many, right, waiting to buy stock, right, at such price, right? But I'm a big fan of this company, especially for the Tesla cars, right? So I bought the Tesla stock by the price almost 450. Right? So it's not a low price, right? So I sell the stock, right, when the price touched the 550, and so I only got $100 gains, right? But for the other peoples, right, they continue holding stock for the past months, right? They actually make a great profit for this company, right? To be honest, right, I'm confident about Tesla for the future operations. I'm just worried about the whole economy, for the market right now. So that's why I sell the stock, right, when the price touch 550, right? But the other people still holding, right? If they hold that, right, you can get a great profit for this company, right? From the 380, right, to the 700, right? Almost what? Doubled, right? Almost doubled. So while the Tesla stock can recover very soon compared with the other companies like the, like the American Airlines, right? Like the Ford, right? While the Tesla stock can going up, right, quickly, right, in the past month, because, right, most people expecting the order of the Tesla will dropped quickly. However, in opposite, right, the Tesla's order from the foreign countries are very stable, are even what increasing. Why? You can see the data for Tesla, right? You can see the China's order for Tesla increased a lot, right, from the last year. Why? Even in the quarantine, right, people still order Tesla. Because what? Because the China, like the India, right, they all have what? They all have the air pollution problems, right? right, is air pollution problems, right? So in the past 5 years, right, Chinese government tried to tackle these pollution problems by limit the household, right, to buy what? To buy the car, right? To buy the car, right? So they encourage, right, the household, right, to use the public transportations, right? Use electronic what? Bus, right? Use the subways, right? Will not drive their private car, right? If you want to buy the, the private car, right, in Beijing and Shanghai, you must have what? Plate, right? But not like in New York City, you can get plate very easily, right? Just do the registration in MVC, right? Motor vehicle commissions, right? But in China, you must what? You must go enter a lottery, right? And once your household are chosen, right? Then you can buy what? You can buy the plate. If you not win the lottery, you can never buy the plate. You must wait, right, for the next year, right? Or maybe even many years, right, to get a plate, right? So it's not very good, right? So the government try to encourage people, right, take what? More public transportation, or what? Or to buy the car without any, pollutions. For example, electronic car, right? So you can see in both Japan and China, right? Especially China, right? They, selling more and more what? Electronic car, right? Your this electronic car, you don't need to go to lottery. You can get paid directly from what? Government, and also you can save the tax, right? So why not, right? So many people, right, choose to buy what? Electronic car, right, to get what? Paid directly, right? And that's why the Tesla is very what? Popular in China, right? So Tesla is a famous brand for what? Electronic car, use the battery, right? And also Tesla is the only foreign brand, right? US brand, right, selling what? Electronic car, right? And we all know the US brand are very popular in the foreign country like the Apple, right? So the Tesla also like Apple, right? It's really popular, right, in the Asian market, especially in the Chinese market, right? So they buy a lot of Tesla more and more, right, these years, right? Okay, so for this chapter, right, we also will measure something about liquidities, right, of the stock, right? Liquidity of the stock are measured by what? By a ratio called what? Called a turnover ratios, right? What's liquidity? Liquidity means you can buy and sell stock quickly, right? As quickly as possible means you have a most liquid what? Market, right? In a global market, right? Developed countries has a more liquid market than what? Like emerging market, because what? Because developed market, right? You can sell and buy the stock very quickly, right? For example, in the US, you can buy an Apple and Microsoft stock, right? Very quickly, right? Maybe only a few seconds, right? Your order will be accessed, right? Or even less than what? Less than 0.03 seconds, right? You can down quickly. Why? Because there are many what? Shares of the stock available, right? There are many buyers and sellers, right? And also the companies, right, issue many shares, right? So it means the asset can be converted to the cash quickly, right? However, in the emerging markets, right, firstly, right, they don't have so many market participants, right? And also, right, their market is in a limited size and not many shares available, right? So their market is much less liquid, right? So means you cannot sell and buy the stock easily, right? Like the developer market, right? So if you want to get a daily, gain or daily loss, right? You should what? You should do the transaction in what? In a developer market, right? For the emerging markets, you should hold what? Long term, right? For the profit, right? For profit. And how to measure it, right? Turnover ratio is the ratio using the stock market transactions over market what? Capitalization, right? Stock market transaction means how much of the stock change the hands, right? From investors, right? From the buyers to the seller, right? How many stock, right? What's the value of the stock change the hands, right? Over the day, right? For example, or over the month, right? Well, what's the market capitalization? It's the total market cap, total market value of the stock, right, on the market, right? So you can see the ratio will reflect, right, how many times, right, the stock, right, change the hands, right, from the investor to investors, right, in the market, right, either on a monthly base or on a daily base, right? How many times, right, the stock change the hands, right? You can see the turnover ratios, right, are actually relatively stable, right, for most national stock exchange, right? For example, many national stock exchange, right, have a relatively high turnover ratios, right? Over 40% of the shares can change the hands, right, in most years, right? And for every month, right, it will be more than 30% of the shares, right, will be changing hands, right? So that's how to solve the turnover ratio, right? We can see some examples next class. And also for market structures, we have actually two markets, right? One is the primary market, right? What's the primary market? Means the place you will buy and sell, you will buy the stock directly from the issuing company, right? So the shares of the stock are totally what? New, right? So the new stock shares can be purchased directly in the primary markets, right? From what? From the issuing companies, right? And how you can buy the new stock shares? You can buy these stock shares from what? From what? From the initial public offering, right? IPO, right? So you can say if your companies want to go to IPO, initial public offering, you will hiring what? Underwriters, right? For example, you will hiring JP Morgan, right? JP Morgan or Credit Suisse, right? So this investment bank will be underwriters, right? They will help you to prepare the IPO process, right? By selling your company stock, right, to the public, right? So that's the first time the company stock are sold to the public, right? From what? From the underwriters, right? They will charge what? They will charge you commissions, right? It's not free service, right? They will charge a high commissions, right? By help you to sell the stock, right, to the public, right? Once the stock are trading in the public, right, from the seller, right, to buyers, right, from one investor to another investors. Now we have what? We have a secondary markets, right? So on secondary markets, right, all the shares are not new shares, but about what? About existing stock shares, right? So these shares just what? Just change the hands, right? From one investor to the other investors. They don't generate what? New shares, but that's the difference, right? And our secondary market providing the market participants with the marketabilities and share valuations, right? I mean, how you determine the stock price, right, is based on the demand and supply of the shares, right? So there are many people bidding and offering what stocks, right? And what's the price? Make the bid, match the offer, right? Is the price of the stock, right, on the market. So that's for secondary market, right? And then you can see the secondary market also with what? With the dealer and brokers, right? So these guys are what? Are making the market more liquid, right? For example, a dealer is called what? Market makers, right? They will match the gap, right, for the people willing to sell the stock and the people willing to buy the stock, right? So they will buy a lot of shares, right, from the sellers and sell to the individual buyers, right? So that's called a dealer, right? So they will buy the stocks by themselves, then sell to individual, right, buyers. So they do the wholesale, right? Wholesale from the seller, then do the retail, right, to the buyers. But for the brokers, right, they not do the transaction directly. They just match the bid and offer, right, and charge what? Commissions, right? But dealers is actually make profit from what? From the price difference, right? They will buy low and sell high. That's how the dealer make a profit, right? But for the brokers, right, they just what? They just get the commissions, right? They match in the order, right? They charge the commissions. They not buy low and sell high. And that's the difference, right? All this is happen on the secondary markets, right? For the primary markets, the price will be determined from IPO, right? So it's not from the broker and dealers. And also we have what? We have the market orders and the limit orders, right? On what? On the market, right? You can place. If you open a stock account, you can place a what? Market order, right? What is market orders? So what's the price available on the market? You will accept this price and buy and sell what? Immediately, right, with the price available on the market, right? What's limit order? Limit order means that buy and sellers will specify the price they're willing to buy and sell. Then they will very aggressively, right, to choose the price they want, right? For example, if the Apple stock price right now is around $20 per share, for example, right, then you can place a market order. So you will pay this price, right, to get these shares, right? If you want to place a limit order, right, for example, you place the limit order as 118, right? You think the price will be deviate, will be going down, maybe a little bit, right? So you're willing to pay less, right? So your order will be not accessed immediately, right? Until the price going down to 118, your order will be accessed, right? In such case, right, only the market orders can be accessed immediately, right? Whatever price on the market, you will take it, right? But for limit orders, you need to wait until the order, right, the price meet with the market price, right? You can take the order accessed, right? If the price never going down to 118, for example, then your order will be expired, right? You will get nothing, right, in your hands, right? So if you want to make a short-term return, right, if you're expecting the price will be changed very soon, right, you are better to make a what? Make a market order, right? For example, for the USO, right, this is the oil ETF, right? We just mentioned in today's lecture, right? The price of USO this afternoon, right, used to be $2.6 per share, right? And you are expecting the price will recovering, right, in the next hour, right? So you'd better to what? Place a market order, right? You don't want to wait right, you will directly buy these shares. Then after 10 minutes, right, the stock going toward $2.95 per share, right? So if you bought 1,000 shares, right, 1,000 shares, right, for this 1,000 shares, not $1,000, right, 1,000 shares of this USO, right, for example, on the 3 p.m., right, and you sell these shares, right, on 3:30, right, what's your profit? 2.95 minus 2.6, right, will be 35 cents, right, for one share, right, times 1,000, right, you got what? You got $350 in total as your return, right? So not bad, right? So have the $2,600 investment, you got $350 gain, right? Just for half hour, right? So you cannot do that, right? Use limit order. For example, you place a limit order for $2.4, right? However, the price never going down, right? So you will lose these opportunities, right? So if you already make sure you can predict the trend, right, you should do the market order as soon as possible. And we also will say the other, stuff, right, in the next lectures for more details, right? For example, we will study the cross listing, Yankee stock, and American depository receipts, right, in the next time, right, for more details, right? For example, what is a Yankee stock, right? Yankee stock means the stock are from the companies, right, not in the US, right? For example, after our government signed the NAFTA, right, with the Canadian and with the Mexico, right, and the Mexican firms try to cash in, right, their equities, right, by selling the stock directly to the US market, right? So this stock is from the Mexican firms, right, but selling to the US public directly, right? So this one called Yankee stock offering. So Yankee means the foreign firms, right, selling the stock to the US market, right? So here the Yankee is not means New York, right? So means the what? Means the any firms, right? They are registered, right, in a foreign country but selling the stock, right, in the US stock exchange. Right, so Yankee stock offering, that's the meaning, right? You can see some questions about it, right, in our homework and test. And also we will study ADR next time, right? ADR is another way, right, if the foreign companies want to sell the stock directly to the US, right, without offering stock directly to the US, right, they can choose what? ADR, right? We will see the example next lectures, right? That's for today's lecture. Like we mentioned, right, in the middle, for the Zoom's interview, right, from the CEO Yuan, right, you can watch the video by yourself, by click the, the videos right, on the sides, right? So I will not play the whole video, right, in these lectures. So please share your thoughts and feedback next class, right, when we talk about Zoom. Right? Thank you.